Welcome back. Sudha Suresh, the CFO of Ujjivan Financial Services, is now mic'd up and ready to speak with us. Sudha, good morning. Thank you very much for joining us. Your stock has listed at a premium and has now gained actually 18 rupees over the 210 at which you all sold it to retailers. What can you tell us about your future growth prospects? How do you expect your assets under management to grow? What percentage this year, and how will margins fare?
Thank you, Lata, and it is great to see our listing and that the stock price is gaining. Our growth pattern is to build a steady and safe growth over the next years to come. Though we have grown fairly to a great extent in the last few years, I think in the next few years we're looking at a growth at an average of about 30% at least every year.
Okay. Growth in what? Assets under management?
Yeah, so our growth of assets under management can be broadly classified as not only our microfinance business, which is well set, but we are also looking at a growth in the so-called missing middle, which is the MSME. So we would be covering our growth in the next other two verticals, which will be the micro enterprise lending as also the lending in housing.
Tell us a little bit about the transition to the Small Finance Bank. By when would you be looking to launch the Small Finance Bank, and what kind of fall should we expect to see in some of your return ratios, your ROAs and ROEs in the medium term because of a transition?
So Ujjivan is on the growth path and on the transition path right now. We have all the building blocks ready and we are well set for this conversion and transformation into a small finance bank. We hope to complete this process and get the banks going somewhere in the first quarter of next calendar year 2017. And as we grow up robust in our microfinance business, we will also be setting pace on the micro enterprise lending and the housing segment. We have an AUM of 4,600 crore plus right now. We are well diversified. In fact, we are the most diversified microfinance institution in the country today, across 24 states, 470 branches, across 209 districts. But we will be looking at growth further in the unbanked and underbanked areas of the country. And we presume that not only our growth will be there in the branches and the AUM, we will also steadily grow in all our conversion of all our bank branches in the year to come.
Okay, so you've got 4,600 crore AUM, you are getting fresh share issue money of 357 crores and you are looking at a 30% rise. A 30% rise would mean another 1,500 crore or another 1,200 crore is what you are going to grow your book. Where will the remaining money come from? Securitization? Yeah, so incidentally we just wanted to indicate that we already raised in pre-IPO about 292 crores. Okay. So the entire primary issue was about 650 crores. Okay. And this funding which has come through IPO will augment our growth definitely, and we have the wherewithal to grow not only the 1,500 crores but more. Okay.
Just coming back to my earlier question about your ROAs and ROEs, currently in FY16 your ROA stands at 3.4% and return on equity stands at 17.5%. Can you give us an estimate of once you transition to a small bank, what would these ratios look like? Yeah, so as we transition, we will definitely be having increased costs in terms of our investment in infrastructure and technology. At the same time, we will be able to benefit from the lower cost of fundings. So we do expect that the cost of funding that we currently have could go down typically between 200 to 250 basis points and to some extent compensate for the increase in the operating costs. And we do believe that our ROAs in the short run could look at a number which will definitely be steady and closer to the returns that we are having.
Your net interest margins are 12.3%. What will FY17 look like?
So I think FY17 is predominantly 9 months to 10 months of the microfinance business and posting a healthy growth. So we do presume that the net interest margin for FY17 will be quite steady.
Okay. Will it fall then in FY18? I mean, how will it benefit you becoming a bank? Your customers at this point in time are people who will save 50 rupees a day or maybe 100 rupees a month. it'll be very expensive to maintain that kind of retail accounts. So will you really benefit in FY18 by becoming a bank? It will actually be a cost, no?
So, see, it's a mixed piece. Basically, our microfinance business is so well set that it is bound to grow at its normal pace of 25 to 30%. Further, even though we have additional costs, we have already set up our base in terms of the MSME and in terms of the housing. So, we do believe that in spite of the increasing operating costs on one side, we will be able to sustain and give sustained returns for our investors, and even FY18 will presumably be at least giving reasonable returns for the year.
No, Sudha, what I'm trying to understand is what is the whole point of getting the license? You are still saying that you will make a lot of money because you are an NBFC. Then why would you want to become a bank?
Right. So I think we should look at a long-term investment in this regard. Typically, why from an MFI to becoming a bank? I would like to indicate that as an MFI, you're operating on one side of the balance sheet, which is just the asset side. And our mission is to provide a full range of financial services to the economically active poor across the country. So in this vision, it is important for us to build on the liability side of the balance sheet also, and that is where it comes that we have to build on the liability franchise. Secondly, as an MFI, we were quite vulnerable to political influences, disturbances. You have seen the AP crisis, but we feel that as a bank, the organization commands much more stability and security. Thirdly, across the almost 3 million customer base who are built with a great degree of trust and loyalty, we do presume that we will grow and also move forward to the untapped market. We will also be able to tap and attract customers who are currently saving in the unorganized sector today.
Okay.
So it's an overall growth mission, and becoming a bank definitely is also an aspirational goal.
Okay. Well, fair enough. Thank you very much, Sudha, for joining us with your initial thoughts and your growth numbers for FY17. It will be a full-fledged bank for the full year in FY18, and that will be, of course, the more interesting period of growth. We'll take a break on that note and then come back and give you that promised chat with Dilip Bhatt, who joins us from his dealing room at Prabhudas Leeladhar.